Hey everybody, Boris SBK Forest. Welcome to the weekly technicals for June 17th to June 21, 2019 for the majors for euro dollar, dollar yen, and pound dollar. And the story next week is going to be all eyes on the Fed. It's going to be mighty king dollar as we look forward. And the big question, of course, is that the market is essentially priced in near depressionary type of expectations into the credit markets, expecting a rate cut, I think a 90% chance of rate cut by July and perhaps even another rate cut before the end of the year. This amidst a situation where the U.S. economy is actually nowhere near close a recessionary level just yet. Certainly, we've had slowdown. Certainly, growth has been tepid, but labor unemployment still remains relatively strong. And just as we saw today, for example, retail spending, while not torrid, is respectable. And that's really the key thing. I think the essence of the U.S. economy is that it's a respectable growth. And under those conditions, it would seem extraordinarily unusual for the Fed to essentially cut rates under conditions where the credit demand and credit tightening is really not, a credit loosening is really not warranted. So you had this massive flow against the dollar for a couple of weeks. And that flow, as we entered the end of this week, started to reverse. Today, on Friday, was really a key tell. We'll take a look at the charts in just 1 second at how the dollar flows really started to change on the charts. And perhaps that's a signal and a clue to us of the things to come next week. So the levels this week, as far as the majors go, have pared down. Euro has really dropped from the 12.14 level now to an 11.13 trade. This 11, by the way, very important level. That's a double bottom test in the euro. And it'll be interesting to see just how this really a function of just how strong the dollar move will be or will not be next week. Dollar yen to me is the most interesting trade of all in a sense because it showed a very strong level of almost like a wall of support. And one of the key technical tenets is that the longer the base, the stronger the breakout. We've certainly had a very long base. I'll show this to you in a second on the charts. And cable is a mess of its own making. It's almost futile to have a conversation about cable because it's essentially a country in complete and total disarray and dysfunction at this point. The Tory party is trying to out-Brexit each other and basically create a situation where you would have the least favorable outcome in the greatest possible possibility. One of the most negative things that happened in cable this week, which I think is really what had the impact of why it got torn down to the downside, was the fact that the parliament actually voted down this motion by Labour that under no conditions would the parliament approve a no Brexit deal. So this doesn't mean that the parliament ultimately will approve a no Brexit deal, but or a hard Brexit deal. But the point being is that the fact that Parliament couldn't even muster a majority vote to essentially stop the insanity from taking place, that is, stop the we're going to walk away from the table without a deal conversation under WTO status, is really troubled investors. And you saw that the moment that happened, all the drive came out of the pound, and it was just been a sell the rally. It's just been sell. It can't even muster up a 30 pip rally against that kind of a sentiment. So that's very important to keep in mind as we go forward. The calendar this week, relatively quiet until midweek. We don't have really anything. We have UK CPI. None of this is going to matter in any way, shape, or form as far as trade goes. Bearish CPI may only add to cable's woes on Wednesday. On Tuesday, we have European CPI. Also bearish. Kathy thinks that deflationary factors still very much in play. They probably are, but I think at this point, so much of it is factored in. I don't think it's going to have a material impact unless it drops down hard. And really, the big story comes in on Wednesday, the FOMC rate decision. This year, the Fed is doing a press conference against every single decision, so there should be some interesting conversation. Nobody's expecting any decision out of the Fed, of course. Certainly, it would be a shocker if the Fed cut rates on Wednesday. But the more interesting conversation, the more interesting tone, I think, will be if Powell basically suggests that there is no chance they're going to cut in July, that they just don't perceive the economic conditions as needed for a rate cut. Now, if he comes out with sort of that relatively hawkish stance, that should be very positive dollar. And all of these flows that we start to see at the end of this week certainly have a chance of repeating and continuing into next week, into our week coming up. Later into the week, we get UK retail sales, again, negative numbers because contraction across many sectors in UK. Although the consumer and labor actually last week was relatively decent. Still, there's a chance here to the downside move. And then Friday, we get nothing. We get existing home sales. I mean, it's really Wednesday that makes or breaks the week as far as event risk goes. That's pretty much where the majors start and finish. So looking at the charts here, this is where it gets interesting. So we're looking at the charts here. You see the very ugly reversal in the euro. The move all the way down and through, not even just down to, but through the 20-period moving average. Just a very ugly candle today, almost a full reversal for a figure. We haven't had a figure move in quite a long time. And generally, these kind of moves are continuous. It's if you look at it from a technical point of view, what you have here is just a continuous lower highs here with right over here. Where's my cursor? I'm having a hard time with my cursor here. Let me just pick up my cursor. Oh, here it is. Okay. So you have a series of lower highs that were not broken. Like ultimately, the downtrend just simply stays in place. That's a very bearish sign. Suggests that we have a reasonable chance here. Certainly from the beginning of the week, where the market may be anticipating a hawkish Fed to move all the way down to the 111. I think the natural trade here is to at least attest to the 111s. The more interesting point, and this will be fascinating, is if we do get sort of a complete recalibration of interest rate expectations, this 111 could give. And then all that talk about 110 really comes back into play, sort of the third time is the charm, and that could really accelerate the move to the downside. So I'm bearish euro, technically, fundamentally this week, until and unless the Fed changes my mind. I think you got to go with the flow as far as that goes. Cable, another disaster. Cable couldn't even muster its way back up over the 20 SMA. But again, we are coming up to that 25.50 support. Let's see if it kind of holds. We break this to the downside, I think it's going to start to fly, and then it comes in the fat finger lows at around the 24, 23s. Again, all of this centers around perhaps Boris Johnson winning the. Ironically enough, at this point, I think Boris Johnson is going to be viewed as a moderate. We may actually have a cable pop on a Boris Johnson win, as ridiculous as that may seem, because he's not utterly insane, and he certainly does want to negotiate a reasonable trade deal with EU. So, ironically enough, that could be we'll talk about this in the crosses, but that might be setting up for a halfway decent cross trade here on the euro pound. But as far as cable itself goes, it certainly is under a lot of pressure here as we enter into the Tory elections. And then here's dollar yen. This to me is the most interesting chart on the majors. What you're looking at the dollar yen here is this wall of support at the 108 level. Now, what's interesting here is it's not just the fact that we've had long-term support here, but that this quality of support is actually pretty good, because what you're seeing is a mass all-wick buying, right? We test the lows, we come back. We test the lows, we come back. Today's same kind of story. We drop low, we come back. That's a signal that every time we're dipping here, there's buying power. And if we could just clear this 80, 108.80 level, which is very feasible, basically if we run the 109s, that creates a snowball effect, creates a whole bunch of stop orders covering, and really puts us on path through the 20 SMA. Then, and of course I'm being hypothetical here, then if we run the stops and we come into the Fed, and the Fed comes in and says, yeah, we're not going to do anything about rates for as long as as the economy stays at this level, then you could have this just really vicious squeeze through the SMA all the way out to the 110s. So it's not inconceivable that could be the scenario that plays out. That's a scenario I think we need to be looking at this week, and that's the trades you probably want to be structuring as you go forward. That's the majors. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.